Hey everyone, welcome to Breakout Wednesday. It is August 28, 2024. It's currently 8 p.m. on the West Coast, 10 p.m. on the East Coast. First of all, remember, this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trade sees a market. And everyone needs to take responsibility for their own decisions. Here's a chart of the NASDAQ. Really has been basing since, say, 25 June or, mid-June. And it's starting to form a bit of a resistance line here, okay? So, watching that, obviously own the NDQs in the self-managed super fund, as I've talked about, and I'm always looking to kind of add to that when I can. If you look at the S&P 500, just kind of basing away, and then we look at kind of my favorite one on the ASX gear. It's still hovering up there near new highs. So look, last week's new trades, a lot of them didn't fire. They're just basing away. eBay did. I'm in that now. The top of that Davis box for some reason isn't there right now, but it was there, so just had a nice start to that move. We'll see how it plays out. That was a kind of a nice one, but INSM had a small loss on, okay, and got in here, got out in the break of the day of the breakout, so got out on that day, and it's went up a bit last night, but pretty tight stop. I might pay for that. It might go flying now, but most of my big winners just fly from the start, so happy to take a small loss on that. All right, now let's just quickly get on. This is cool scan I do. First of all, actually, before I do that, there is we've just launched a new favorite scanner that we've upgraded, and a lot of members have been asking for it. Have a look in the forum and go to Pro Trader Launches and updated favorite scan function and watch this video. Also, you can also go to YouTube and watch that, okay, if you'd prefer. Now, that's available to the public, that video on YouTube. Now, secondly, this is cool scan I've been doing every day. Well, not every day, but a couple times a week. And it really just is helping me find leaders, I think. And there's been some rippers coming up, especially NASDAQ and NISI markets, but ASX too. What it involves is going into indicators and vents and doing relative strength above 90, and then the filters is just to close above the 50 exponential moving averages, and like the volume filter, whatever you want, right? I've been putting 250,000 shares just because I'm sick of getting stuck in, penny, illiquid pieces of shit, okay? And then I'll do that scan. All right, it finds 107, and on a busy day, I couldn't be asked going through that. Like, I'm doing a bunch of scans, and I'm probably looking at 1,000 stocks a day, on an average day. So, I need to try and keep that down. So then I'll go back into, the Davis scanner and just put 3. You can see what I've done, any box. And then just put, obviously, the filters are relevant because we've just already done all that. And then just go to scan results and just click, obviously, the latest scan I did, right? Just to filter those down. What I'm doing is looking for these strong relative strength names that are actually going sideways and basing, and even if it's only for 3 or 4 days that they're basing for, right? And then it only finds 22. And then I'm scrolling through it. Not all of them are good setups, but some of them may be good setups in a few weeks from now. And it's also just a great way to show the relative strength. Like CYL, holy shit, what a move for those who kind of trend traded it and stuck with it. But the point of this is this, look, EMR, it's not ready yet, but that could be ready in 3 weeks from now. And so I whack it in the watch list, right? A lot of these hub, we were talking about hub back here. I traded it on Breakout Wednesday. I think it was it there? I forget, but I got out of that. Probably too early, obviously, but you can look at this setup in MHA, by the way. Holy shit, right? This is perfection, okay? But 4 touches of that line, tight right-hand side, and then a breakout. Missed it. I was looking at it and I missed it. So, it's just, you got to just kind of, figure out why you missed it and try not to miss that shit again, okay? And so I like doing this scan, SSM, okay? This is stock. Remember we're talking about this back here and this huge base where it kept opening on its low and closing on its high, and it was doing that for 5 weeks in a row, and then boom, has not stopped trending since. I'm not saying that this is a setup yet, because it's not, but if that can do that for another 3 or 4 weeks, then holy shit, yes, it is a setup, okay? And I just love doing the scan, TT, because it does find you Wise Tech, okay, an example of finding the leaders, right? What a winning stock, gapped up, huge earnings, basing and Davis box. There's nothing that's going to stop me taking that Davis trade. Very few people want to touch it because of how high it is. But if that bases for 3 or 4 weeks and tightens, then I'll take it. And so that's the scan. It's worthwhile finding the time to do that once or twice a week, whacking the potential leaders in a watch list and kind of just keeping them there and glancing at them every day, all right? Now, there's some other stocks I want to crap on about, and I'm going to finish with one mother of all bases, which is shaping up on the ASX. First of all, these are all kind of Davis scans, but let's just save me time, let's just go in. Here's ANZ, all right? Now, if we just do this Davis scanner here, down the bottom, just scanning the actual chart, this has got a lot of Davis boxes. I thought it was in Davis box now, but it's not. Maybe it was some other scan I did, who cares? But if you look at ANZ, okay, it's obviously been bashed in the media lately because they got done for fraud and I don't actually know the details. I'm not going to pretend I do, but I did listen to a podcast. I got really bored and I tuned out. But they got done for being dodgy. Like a bank being dodgy, big deal, right? They're all dodgy. It's their business they're in, and no one gives a shit. Okay, they get fined 500 million. The bank doesn't care. No one cares, and they get back to business of ripping people off and printing money, right? And so this stock is sitting up here. It's got blue sky above it at all-time highs. It's been basing really since March. Okay, this remember, for those following Breakout Wednesday every week, this was this awesome base back here that broke out in, back here at the 26 level, okay, that I took. And I was talking about heaps, and that just trended up, right? It didn't really close below its 21 exponential moving average for months. Okay, and it's still basing. CBA's at new highs, NAB's at new highs. All the big banks are strong. And this has got a double top here, which is just a few ticks above this old high, and now it's tight on the right hand side, giving us like a cup and handle. So if that can just base here a little bit longer, then that can be a great setup for me, and I'll probably take it. Another stock and one I've been talking about heaps is ARB. And let's just quickly do our Davis scan and ARB again, all right? Bang, ARB, come up. All right, and so this was this huge channel break, which I tend to think are some of the most reliable setups when they're over kind of a 3 to 4 month period. A bit like the Sun trade, the Cochlear trade failed, but the Sun didn't, and the ARB didn't, and a bunch of others didn't. And I do think they're quite reliable. And ARB now, it had this little mini correction where it got dumped and then it just bounced again. And it's setting up here again, it's got a Davis box, right? So I'm still in it though. So let's just, I'm not going to add to it because I'm, pretty happy with my position. The other one is Myer. And I believe I did talk about Myer maybe a week or maybe it was 2 weeks ago. I don't know. But it's here in this Davis box. Now, the only thing that makes me not want to take this trade is the fact that it's Myer, right? And it's just, I've got this preconceived notion in my head that it's a boring ass, bricks and mortar shop that only, really ancient people go to, and I haven't been to Myer in, 15 years. I just don't know. It used to be Grace Brothers when I was growing up, do you know what I mean? Like, it's just not a shop I go to, but that doesn't mean jack shit, ST, what is it? ST, one sec. Yeah, STP, right? The Undie company. Remember when it was setting up back in this huge base back here, this stage one? This is just one of the best setups you'll ever see, okay? I found that. I talked about it here, and then I bought some undies. I hated the undies, and then I thought in my head, that it's a shit business. How can that go up? Because the undies I didn't think were anything that special, And then what did it do? It went from 40 cents to $1.80. I've been doing this for a long time, and I'm still, getting in my head and still making dumb excuses for not taking trades. The fact is, who gives a shit if I like their product or not? If this is setting up in one mother of all bases, just leave the egos and opinions at the door and trade the technical setup that it's giving you, all right? Because this was just a license to print money for technicians that took that trade, okay? It's just absolutely textbook. And just getting back to the point, is that I don't want to take Myer because it bores the shit out of me, but it doesn't mean this isn't going to go for a run. JB Hi-Fi just went for a run, okay? Even though we're in a cost of living crisis, it seems that people are still buying a bunch of shit. And so yeah, so anyway, there's Maya setting up in a really nice looking Davis box. Just quickly on the NISI, I'm going to get back to the ASX in a sec, but just quickly on the Nasdaq market, there's Dropbox. Okay, now Dropbox, right? I was looking at Dropbox back here. It had this huge base. Okay, a little handle here, and it broke out. I actually got whipped here, and I got in here, and blah 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 blah. A lot of like stops and starts. And then I'm not in here, luckily, and then a gap down on earnings, and it's been basing since, right? And now it's kind of it's a weak relative strength name, and so I'm probably not going to touch it, but it's had this fake out, and it's now here, and I'm just, the old me would have taken this every day of the week. I am trying to just take the relative strength names over 90 at the moment, and this is probably way below there, right? It's 36, right? Holy shit, so it's been getting hammered over the last 12 months compared to the overall market. But I just thought it was interesting because of the resistance that's forming there, and I'm just watching that play out. Now, another one that I do like is Deckers Outdoor Corp, and I mean, I've talked about this stock heaps. It's just a good company, okay? For those who like fundamentals, just you can learn a lot to learn. If you're into business, there's a lot to learn about this guy. They're a serial acquirer. Like, they buy brands and they grow the brands, but they don't start brands. They just buy existing brands, okay? But they're very, very good at it. A bit like Constellation Hardware on the TSX on the Canadian market is incredibly good software acquirer, like one of the best companies in the world, Constellation Hardware, and Deckers is kind of a similar quality, but in that brand acquiring space, okay. And it's setting up here. It's broken this channel. It's still in a long-term uptrend. It bounced off its 200-day. It's got a double top here at 780 or whatever, 980 I meant to say. And now hopefully it's going to tighten here a lot and give me a high risk reward entry. Okay. Another one just I want to talk about is just what's happening at the moment and why these gap ups I always tend to put in watch lists, all right? So this guy came up in a Davis scan. Let me just show it right for you again. ORA, right? And it just came up in this Davis scan, and I see these big gap ups and the massive volume. I'm like, shit, that's some desperation to get in, okay? Big volume, and it hasn't sold off. So now all I need is a long enough base, okay? And then I take that entry and boom, right? To me, I want to be in these stocks that people are desperate to own, that are, having amazing, announcements that no one really expected, and there's just money pouring in after it. As long as I can get a risk reward entry on that makes sense after that with a nice base, a good enough technical base, then I will take it. So ORA is in the watch list. Now, YUMC, this is just, I just want to end. I've got 3 more stocks to crap on about, right? And this is like the riskiest probably one I'm going to talk about, and I don't have any orders in yet, but a little Chinese stock, kind of equivalent of trading absolute pieces of shit, crypto, shite coins, and YUMC. This came up in a volume scan, it gapped away in huge volume, and now it's sitting in a Davis box. And let's say you like it, the Asia ETF and Baba and all those big Asian names and like Bidu, and they all start rallying, and we see a widespread China kind of move. Then I will keep this in the watch list, and I'll just see if this keeps tight in here and not drop back down here. And then if those big names are leading a China move higher, I'll quickly put an order in and try and catch a really explosive move on that, because it's got that explosive move written all over it. We just need to see widespread strength in the big Chinese names. Okay. The other one, and I talked about before, is AW1, and this I still think that it's worth watching. Just it's a little tiddler, obviously. On the ASX, it had shit all volume today, but volume has been drying off. It's sitting here in the Davis box. It's got a double top here. It's a bit like the HUM setup. By the way, good day today on HUM, hey. Good 2 days. I mean, it keeps opening on the low and closing on the high. So, I mean, today it wasn't actually out, but what I mean is that it's a nice candle, right? And maybe it's flagging here. These little flags like this after huge rallies are very low probability. I mean, it's just not flagging for long enough. But it's better than crashing back down here, isn't it? So anyway, now I want to just leave everyone with Shaver Shop, right? That here doesn't look that special. Okay, it's sitting here in a Davis box. Okay, let's just look at it. Boom. All right, and you can see another line up here, which is just above that Davis box. Okay, let's go to monthly data. Bang. Okay, big box sitting at all-time highs. It IPO'd back here at like $1.16 or whatever. It rallied that week up to 123. It went to the shitter and went down to 23 cents, and now it's rallied back up to $1.26 or whatever. And then it's been giving us this kind of saucer-ish base with rising bottoms on the right-hand side. Okay, it is textbook. You find me a more textbook setup than that. Okay, on a monthly chart. Let's look at the weekly. Okay. For those that have been around for ages, think back to the UWL setup, right? It was a wild base, that one. It shook a lot of people out, and it's delisted now. But holy crap, that was a good move, right? Those who stuck with it, I was up. Let's not reminisce, okay? But it's a similar setup to that, and on a daily chart, it's tricky, right? Because it's like, I don't know, it's like if you're going to buy that break, where are you going to put your stop? Okay, that's the question. I tend not to these setups. I tend not to put them here. I just think you're going to get whacked out 9 times out of 10. I personally will be putting a bit of a smaller position on with a stop down here somewhere, all right? Giving that guy a lot of wiggle room, paying a lot of respect to that big base, okay, and then giving it starting with a small position with the concrete plan to add to it, all right, like on a flag or a new Davis box, and just with the plan to pyramid into it a bit like I kind of did on the REA trade that I've talked about, where I bought a few lots, or the zero trade where I bought, 3 or 4 lots, I can't remember. These big bases is what I'm getting at is that sometimes it's like, that mental switch goes off in my head where I'm like, I want to own this sucker on a break, because statistically, I know that, at least 50% of the time this thing is going to have a huge run. All right. So if it's one of the 50% that's wrong, I cut the stop. I cut it with a stop loss. All right. I take a small loss. But these technically say 50% of them will have big moves, and if I can just be patient and sit on my hands and do jack shit and let it do its thing and add to it. So instead of thinking about how I can get out of this and bank my profit, okay, I start thinking about how I can buy more of it. And that's the kind of the way that I'm already thinking with SSG. And I'm getting too excited, and I shouldn't be, because this is probably now going to fake out and then dump down. So just always have a damn stop loss and realize that this is the stock market. It's the riskiest game in the world, but it is the best. Take care, everyone. Chat next week. Bye.